What is up guys, Taiki here, and today I just want to discuss the state of DeFi and also why I'm still positive on the perp DEX sector as well as GMX. So if you like the content, please like and subscribe and leave a comment in the comment section below. Link to the premium Discord is in the description below as well. So let's get right into it. So I've been saying that, I think that GMX is in its bottoming process. I've been saying that, right? But like, boy, oh boy, has it been a very steep bottoming process. And hopefully, right, this is the bottom, right? And admittedly, right, in the wise words of Warren Buffett, I didn't think it would go down this much. But, we're here. Why do I still think that? Why do I still think that, it's going to be a strong coin? So whenever the market's correct, and whenever sentiment is bad in the markets, no altcoin is going to be able to really just decouple and go up only, right? Like maybe some low market cap coin can do that, but generally, right, like anything over, let's say $100 million market cap is typically going to trade in line with other altcoins and the majors. And recently, right, we had the SEC go after some coins, calling them all securities, and then it also led to platforms like Robinhood delisting Automatic and so. And then this morning we got news that Celsius is going to be just dumping, like market dumping, or maybe no. I'm not sure how they're going to be dumping these coins, but they're going to take all the Matic, ADA, Link, Dot, etc., and convert it into BTC and Ether. So definitely not great, right? Not good for sentiment, and it generally feels like it's a sin to be positive any altcoin, in the short to medium term. Longer term, right? Of course, we can all be positive on whatever fundamental bets you want to make, but in the short term, it definitely does not feel great. And of course, GMX has suffered immensely. I think it's down 50% from its all-time highs. And I think the most it's been down was roughly here, roughly 75%. But this was back in 2022 when the platform was less battle tested. But historically, one observation I'll make is that perp dexes and mostly GMX has typically led DeFi out of despair phases. First was back in June/July of 2022 when 3AC went to bust after Luna collapsed. Of course, it led everything to just nuke in price, but GMX was basically the only token in DeFi that was actually up on the year. I think GMX and GNS was the only coin above $100 million market cap that was actually positive on the year. It went from roughly $15 to $60 from end of Q or beginning of Q3 to the end of Q4. It led us out of markets because it has good strong fundamentals, it benefits off of volatility, and therefore. And then I guess the most recent nuke we had, you can kind of argue that this is a nuke, but I think we're in the process of a nuke. So I'll be talking about past nukes and how GMX has recovered. And obviously, right, the most recent one was FTX when FTX rugged everyone, and it led everything to nuke in price, right? Bitcoin hits 16K, Ether, Ether put in a higher low, but generally everything just kind of nuked. And when FTX rugged GMX, it went down, actually I can't see this. GMX went down, what is this? On November 9th, it went down 27%. And in the following day, it was up 35%. And then within 2 days, it was putting in, it was basically putting in new local highs, which is kind of insane. And I'm not really saying that that's going to happen. But typically I'm just saying that, hey, when markets nuke, when sentiment's bad, everything just goes down with it. But historically, I think perp dexes, mostly GMX, has been the strongest coin coming out of these types of despair phases. And yes, this is not a good look, right? It definitely seems like systematic selling, and I've been kind of absorbing the supply unsuccessfully. But obviously I have a bag, right? I am biased. But let's talk about why I still think that it could be a good play. And one of the reasons why I think it outperforms is that it actually has strong fundamentals and it actually makes money, right? It pays a yield that's not inflationary tokens. It pays a yield in Ether, and it also allows for various yield farming strategies. So I'll talk about one strategy that I've been doing that's been working pretty successfully. Of course, GLP, you get to be the house of the casino, right? The GMX casino, and you get paid in fees. And also, if traders lose money, you make money from that. But if traders make money, GLP loses from that. But typically, right, retail traders tend to be super long. So whenever the markets go down, GLP tends to actually benefit. And actually, do like an all-time chart here. But like while I wait for that to load, let's kind of discuss this farmer's hedge strategy. Because I've got a bunch of questions about it. I mean, I've talked about this strategy many times on this channel, but I'll like quickly walk through like how it works and why I love it so much. So basically the concept is using a money market such as Aave, where I use something like Ether as collateral, which is what I'm doing now. Then I borrow AVAX, right, on Aave, and then I sell that AVAX, right? So I have Ether as collateral, I borrow AVAX paying 6%, oh, sorry, 5%, it's not that great, but that's fine. And then I sell my AVAX that I borrowed, right? I go to buy GLP, take my AVAX, like everything that I borrowed, and like just like sell it, right, into GLP. And then basically my debt is denominated in AVAX, but I've sold my debt and I basically denominate in GLP. So when the markets actually nuke in price, like it did a couple days ago, like when AVAX. Like this is a painful candle, right? So I think I put this position on somewhere, yes, like somewhere here, and then it's kind of nukes, right? And when this happens, of course, the value of my debt just nukes in price by like 20-30%, but the value of GLP kind of maintains its value. Of course, it kind of goes down, but the composition of GLP is like this. It's like 5% AVAX, the target weight is 24% ETH, 20% BTC, and then roughly 50-ish% stable coins. So actually you kind of get the point. So it's basically like a 50-50 pool. So when the markets nuke, GLP goes down less, and if the markets go up, then typically GLP goes up less. So it's kind of like a soft hedge strategy. So I've been doing such things as buying more Ether, buying more GMX, and of course, right, I guess to manage my risk, I'm doing so by using the Ether as collateral, and then like shorting AVAX like this. And when the markets go down, yes, my entire portfolio is sad, but at least I get to protect some downside. And I'm paying like a 5% interest rate to borrow AVAX, but this position is paying me 12.5%. So I'm technically being paid to soft hedge. So that's why I call it the farmer's hedge. Maybe I can turn that into a meme, but that's kind of how it works. And like you can do this for like other money markets too, right? You can borrow Ether and then short it. I mean, I don't like shorting Ether, to be honest, but I kind of consider AVAX to be like a farm token. I don't really think it's going to perform that well. If Solana and Polygon is a security, then like Avalanche is probably it's probably a security, and has like the lowest market cap to FDV ratio. So that's kind of like my my macro bearish view on AVAX. And basically I'm just making a bet that the AVAX ETH ratio just continues to go down like this, right? Not great. So that's kind of how it works. But like generally, like PerpDexes benefit off of volatility, and I think these tokens will outperform the average altcoin. Of course, right? Like I'm just saying that like when the markets do bounce, I think these coins are gonna bounce a lot harder, and potentially put in new local highs or even all-time highs, but that remains to be seen. So let's talk about the catalyst for GMX, and we kind of saw this. Actually, let me refresh this because I need some data to show. But basically, how GMX works is people have been complaining about how the fees are super low, and the volume is low, and that's kind of like how it works when the markets are looking bearish. If there's no excitement in the markets, then no one's going to trade on leverage, and if people are losing money, then they have less money to leverage trade with. And people have been saying, hey, GMX is kind of dead. But yesterday we kind of saw this big light blue dildo, and I was actually tracking this, and this is like actually one of the reasons why I was like saying that, hey, like I think GMX is going to be like probably like one of the better tokens to be allocated into. So how GMX works is that when someone has a position open, they're paying like a 0.1% fee to open the position, and also they're paying like the funding rate, and the funding rate only goes to GMX stakers and GLP holders once people close the position. So the fees have been low, but that's only because there were a lot of these positions that were like open, that were like levered long Ether, that has not gone liquidated, and the person hasn't really closed their position yet. So this position, right? So basically yesterday I was saying, hey, like the 3 largest positions on GMX are about to be liquidated, and if liquidated, $3.5 million in fees are going to go to the platform holders, I suppose. So this position was getting turbo wrecked, right? This person got liquidated. This person, like this person just like long the top, I suppose. So just gotten wrecked, and then this person down basically like not great. And if you want to, I guess. I'll provide a link in the description below, but you can actually check for open positions by going to this website. It kind of looks so that you can like filter for size, and most people tend to be bullish. They're like they have the bull horns, right? They're long, but like most people lose money, so like that's kind of how the platform works. But like those positions got absolutely annihilated, like pretty bad, right? It's just like, yeah, I mean I've shown this, but yeah, it's pretty bad. And like GMX, the asset isn't really reacting that favorably. You can argue that, hey, like it's up like 3%, while like the majors are like kind of flat. But like this is like pretty painful, right? It's not great. But I do think that it could. I mean, I'm not calling for the bottom because I thought like $50-ish was like near the bottom. But let's talk about like why I think this could be the bottom. And it has like multiple reasons. Like one is like fundamental in the sense that it's just made a bunch of fees, and whenever we see these big fee candles, it kind of becomes like a selling point for people to pay attention to, right? It's like, oh my god, like GMX made a bunch of money. Like that's kind of cool. And then next week the fees are going to go to GLP holders and also GMX stakers, and I think that's also going to bring incremental TVL to the platform, and which also results in like more fees, right? So a bunch of open interest got wiped, and traders got absolutely rinsed. Sorry, I keep going back and forth on this platform, but that's one of the reasons. I guess another reason, let's actually go here. I mean, like this thing always takes like a long time to load, but I think it's like two part, right? I mean, like first of all, like the data looks good, right? Like staking yield, GLP holders make money. I think the GMX staking rate is going to be like 10% next week, and then maybe GLP is going to be like paying 30% or something. I mean, I'm just like guessing because like it kind of depends like how the platform does this week. But like despite us being in a bear market, or like whatever market, right? Like not like a bullish environment, the GLP supply, the TVL has been going up and up and up. And yes, it's kind of stagnated because volumes have been low, but if GLP is paying 30% next week, for example, then I'm sure that more people are going to pile into this position. And there's another catalyst on the horizon, right? GMX V2, which I've talked about. It went live on testnet on Avalanche in late May, and it went live on testnet on Arbitrum on June 12th. So if nothing goes wrong, we should expect V2 launch to happen sometime in end of the month or sometime in July. Fingers crossed. I have no idea, right? Because developer timelines take forever. I mean, this thing was supposed to come out like November of last year, or at least I was told. But I think that's going to be a catalyst because I know for a fact that they're going to be incentivizing liquidity. I have no idea how, but they're going to be incentivizing liquidity. And we have like dozens of, maybe not dozens, but like we have a bunch of like Arbitrum DeFi projects that's been waiting for V2 to launch to build product on top of GMX V2. And I think it's going to naturally create more farming opportunities in the future. Of course, it remains to be seen. You have to wait until like the markets launch and whatnot. But I think it has like the tailwinds of, like the fundamentals look good. V2, right? A catalyst is on the horizon, and this really hasn't percolated yet, but I mean, it hasn't happened yet. But with Coinbase and Binance under scrutiny by the SEC, maybe it makes less sense for people to have significant money on these exchanges and then look into on-chain perpetual dexes. And GMX isn't the only one. There's DYDX, there's all these other forks and whatnot. But GMX is like the most liquid place to trade out of most of these platforms, so it should receive some incremental flow. So that's kind of my bull case, I suppose, for GMX. Of course, I am biased, and I didn't think it would go down this much. I mean, but like jokes aside, that's kind of the bet I'm making. And to simplify where I'm at, I'm long. I'm basically long like a basket of perpetual dexes, long Ether, and then I'm short AVAX. It's kind of like my main short to medium term strategy. It can also become a longer term strategy. But like let's worry about that once we get there. So let's talk about some farming opportunities, right? I mean, I talked about GMX, but I also want to talk about MCV, like Mux Protocol. I'm not like saying that people should buy this token, right? I'm not necessarily saying that. But where'd it go? MCB is basically a perp dex aggregator that also has their own GLP type asset. So these are the metrics, right? I mean, it's kind of up and down, like not too great. I'm not a huge fan of the tokenomics. I think the tokenomics are like really bad. But this is like their equivalent of GLP. It's on the up and up and up. But they also aggregate trading through GMX and GNS. So they're trying to become like the best place to trade because you can post collateral on Mux and then you can trade through like the most through their aggregator. It'll give you like the best rate basically, right? And it's sitting at like a 50 million-ish market cap. Okay, chart's not loading. Yeah, it's like what is it, like a $44 million market cap. And typically like aggregators have not been great investments. Like for example, like 1inch, it's $250 million market cap. I think this is too high because the point of aggregators is to save you money, so they can't really charge you fees, right? So like it really shouldn't have like that much value outside of like a VC selling. But I mean, this thing is worth $250 million. But maybe it's not good to use this as a comp because yeah, I mean, like what the hell is this? But I think perp dex aggregators, you can make if you're optimistic, you can make a case for it. Like I'm not saying that this is gonna happen, but I think how perp dexes can potentially monetize is, if it does become like a good place to trade, then some of the liquidity is gonna route through their own LP, right? So they can, maybe like most volume goes through GMX because it's like the best place to trade, but maybe some, like if the open interest on GMX is too high, then maybe like that demand flows through like aggregators, flows through like its own LP, and this is how they monetize. And also like platforms like GMX, GNS, right, Gains, they all have like referral codes, right? It's like, hey, like use my referral code to get 10% off on trading fees and whatnot. And what Mux can do, right, is have their own like referral code, right, to give off to give discounts to traders. But there's also like a rebate where I don't do referral codes, right? But hypothetically, if I were to give you a referral code, right, to trade and you like lose money, then I get like 10% of the fees or something, right? That's kind of how it works. And then like if more volume is being routed through aggregators, some of that can flow to the token holders, right, for the Mux Protocol. I mean, it remains to be seen, but I do think that with more forks coming and as more liquidity gets fragmented, I think there's going to be more of a case to be made for aggregators, for perpetuals, and though with DEX aggregators, I mean, I use 1inch pretty often, but like I would never buy the token, and because there's no value accrual, right, for aggregators. But I think for perps, there could potentially be value accrual for aggregators because you can direct some flow through your own LP and also maybe take the rebate and then just give it back to like token holders, and then traders benefit too because they get like the 10% off code or like they get like 10% off or something. And if you look at the token price, I mean, this is kind of interesting, right? Of course, like it was down only in 2021 because their product was not good, and then they pivoted, I think, in like September or something. But if you kind of zoom in, it's kind of in this uptrend, like MCB, the asset. And I think more importantly, I think denominating tokens in Ether is important because if you're not outperforming Ether, then like what the hell? Like we should all be staking Ether and like earning the 5% rate. And while I'm waiting for this to load, but like quite recently, we've seen some pretty big buys for MCB. There's been like a few addresses that have gotten funded from Binance and bought like 1 to 2% of the supply. And I'm not sure why it's not loading. But basically the point is, it's actually putting in higher highs. Okay, there you go. It's actually like, in an uptrend against Ether. Of course, like, it started out from like a super low base. So of course it's gonna generally be uptrending. But yeah, sorry, like I think my platform kind of, or like, my laptop kind of slow, or sorry, my desktop kind of slows when I'm recording. But it seems like we're in this pretty good looking uptrend. You can argue like maybe like resistance, support. Okay, like I'm not sure what's wrong with okay, never mind, right? Resistance, support, and then maybe like this is resistance, and like we're just like bouncing off support, and like maybe we're gonna put like new local highs. So like I mentioned, I'm not a huge fan of the tokenomics, so like maybe like like, you know, like in like buying altcoins right now is like generally scary. But the point is, I think it's an interesting platform, and I think, you know, it's also a really interesting farm, right? So it's very similar to GLP. You can provide liquidity for MUXLP and be paid 22%-ish in Ether and then 7% in Mux. And Mux is a token that you farm, but you need to vest it over a year to turn it into MCB, which is like the most liquid token. And, you know, it has all these assets, right? You kind of have to do the math on like the exact composition, but it's like roughly 50% volatile assets and then 50% stable coins. Of course, you're being exposed to a bunch of bridge risks, and it's like a multi-chain thing, right? And there's like a centralized component to it. So, I mean, do your own research and whatnot, but I think, you know, there's a reasonable chance that MUXLP in 2023 is going to be like GLP of 2022, because in 2022, right, GLP was paying like escrow GMX, and like, you know, that was like a lifesaver, right? Like GLP, like it was like one of the reasons why like I didn't get completely wrecked in the bear. So you can make an argument that, hey, like if you think that perp DEX aggregators can potentially be a thing, and this is like the highest quality aggregator, then why not like allocate some capital here, farm it, and, you know, if the token sucks, then like you can pull out whenever. But if the token's good, then, you know, like in the year 2024, you'll be vesting your MUX into MCB, which might have some value. So I still think that, you know, it's an interesting form to look into. So there's that. And I'll also talk about this. So if you remember, you know, Quickswap, right? Like, does anyone remember Quickswap? You know, if you throw back to like the Polygon days, when it was going up only, right? You know, we see some, you know, sad Patrick here, but you know, they've been around for like 3 years, to be honest. They're building on top of Polygon, and now they recently dropped their ZK EVM. Like they dropped a perp DEX on ZK EVM, right? Like, I mean, there's so many GMX forks, it's kind of annoying, but it is what it is. But, you know, you can provide liquidity and be paid 4% in Ether, and 14% in Quick tokens, and 18% in USDC. So, you know, they're basically compensating the yield by just like, you know, giving you like a bunch of tokens. The composition is like this, so it doesn't really go over like the math, but it's like what, like 6, 8, like roughly $900,000 in stable coins, and then yeah. It seems like, you know, it's like a 2-to-1 ratio of like volatile assets and stable coins. And maybe, right, like maybe you don't feel comfortable with Matic because Robinhood's going to nuke it, and then, you know, Celsius is also going to nuke it. But, you know, like, is it being priced in? I mean, yeah, like people are like this shorting Matic to Hades Town. And, you know, you can technically do the same thing, right? I mean, like, I don't recommend shorting, right? But like, just for the sake of talking about it, right? You can technically use like Ether as collateral, borrow Matic, right, at like 5%, and then like just dump it here. But, you know, like, does it make sense to short Matic after it's already down 30% in a week? I'm not quite sure. Maybe it makes sense as long as there's so much supply headwinds. But I still think it's like a pretty interesting form, and it could be like a good way to play, I guess, Polygon ZKVM, for example. So lastly, I'll just like quickly talk about a stablecoin farm, and this is on mainnet, so it's like not that exciting, to be honest. Yeah, and it has to be this protocol called Raft. So Raft is kind of like, it's not like a direct liquidity fork, but it's kind of like liquidity where you can use Ether as collateral and borrow a stablecoin called R. Liquidity only allows you to use Ether as collateral, whereas Raft, you can use staked ETH as collateral. And it's backed by Wintermute, Jump, all these VCs. It's audited by Trail of Bits, which I think is like the #1 auditing firm in crypto. So maybe it's less risky from that extent. They've been live for like a week, and TVL 45 million, yada, 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 right? So you can use, you know, staked ETH, which is paying 4 to 5% right now, and then you can borrow R. I think you're paying like a 0.5%, like the last time I checked. I think the rate varies depending on market conditions, but I think it's like roughly 0.5%. What you can do, right? So you can use staked ETH as collateral, borrow R, paying 0.5%, and then you can go to aura.finance and go to here, and you can, you know, put your stablecoins in here and then farm Lido. So the team has a bunch of like Lido and staked ETH in their treasury, and they're going to compensate our liquidity or incentivize our liquidity for like the next 6 months. I think you have a screenshot. Yeah, so, you know, they're going to have like $600,000 worth of incentives over a 6-month period, mostly in Lido and I think Stake Deed asset as well. So they're going to be using that to incentivize liquidity for R. So yeah, I think it could be a good stablecoin farm, and even if it can be like a way to like earn yield on Ether and like also boost that yield. And you know, it seems like in terms of like safety, part of the emissions are going to be reimbursed by Lido. So and like Lido retweeted their launch, so like maybe they're going to be like an unofficial partnership, right? Because there's also like this protocol called Libra Finance that like pumped a lot, but like now it's like down only because it was like a pure farm token. I mean, in my opinion, right? Like I'm not hating on them, right? But they're saying, hey, like, you know, just be careful with these like new protocols. And you know, I'll share these dashboards too. And I guess also like you can also use Raft Stake Deed and R, right? A 50-50 ratio, and then earn the staking rate, right? Whoops. And also be paid, what the heck? Also be paid in Lido tokens. I actually think Lido is a pretty good token. I mean, there's like bull and like bear cases for Lido, but if you can farm it for like 10-11% using stablecoins, or put like a ETH USDC pool, right? Basically, or like ETH stablecoin pool and be paid like 16% in Lido, I think that's pretty attractive. Like, not gonna lie. So I just like wanted to share that, and I'll also include this in the description below. But you know, I've been trying to like learn Parsec, and they have like pretty interesting dashboards, and you can kind of track like the growth of Raft, the R token here. I mean, I guess it's like not that exciting, and you know, Libra is like still dominating, I suppose, but like maybe Raft is like gonna benefit, and then there's also like this where R supply, etc. Maybe it's not that interesting, but hey, like might as well. So to wrap up, I still like perp dexes. I think coming out of the despair phase in crypto and altcoins, I think perp dexes, notably GMX, has led the markets, the DeFi markets, you know, to new highs, or like basically like, you know, it kind of leads the DeFi sector. And in terms of evidence, we saw this back in June/July of 2022, post Luna and 3AC, and also post FTX in November of 2022 as well. And is history going to repeat? I'm not quite sure. Of course, I'm making a bet that, you know, I think GMX will outperform if the markets do bounce. And I do think that like when there's market uncertainty, any product that, you know, pays like a reliable yield that the markets generally trust, I think, you know, has stronger tailwinds, and like, you know, and whenever, you know, it makes like, you know, a bunch of fees within like 24 hours, it kind of becomes like a selling point for the community to rally around. So, okay, this thing is not loading, but, oh, okay, sorry, like my desktop is really slow right now. Yeah, you know, basically like, you know, it led the markets out of June 2022, and it also led the markets post FTX, right? That's kind of the point I made. So we'll see, right? We'll see. I own GMX, I own MCB, and I own Pika, the Pikachu token. It's down like 25%, but it's more like a longer term thing. Maybe I get wrecked, but basically like, you know, like focusing on GMX. So thank you guys for watching. See you guys later. And if you want more content, I uploaded 3 videos a week in my premium Discord with daily updates. So, you know, feel free to check that out if you want to. I accept crypto now, so I can do that now. So thank you guys for watching. See you guys later. Bye-bye.